What's good, everybody? It's Jonah coming back at you on another video. So with this video, this is going to be a recap on the S&P 500, a trade that I took today. So the previous video I just posted on my YouTube was a trade recap on the NAS100 for Tuesday the 21st. Now this video that's going to be posted is a trade I took today on January 27th on the S&P 500, and this resulted in a win, guys. So the trade that I took, well, the trade video that I posted for last week's trade on Tuesday the 21st, I was not able to take that trade. And I explained it in the video for you guys. I was not able to take that trade because my broker stopped working. And I'm not a big fan of like Trade Locker, but since the whole, you know, debacle ordeal happened with MetaTrader 4 and 5 and whatever, a lot of the unregulated brokers went to Trade Locker. So that's what I have to deal with. And that was literally my first trading day back in God knows how many months being away from the charts. And literally, my broker goes down when I was trying to execute the trade. So I didn't end up getting in the trade. And the crazy part is the trade panned out to the T, like all of it hit final target. So that was a trade that I couldn't participate in, but that's okay, guys, because there will always be another trade in the future. So today's trade, I mean, as you can see, is almost 4 o'clock. So of course the trading there already happened. So this is a recap of the trade I took this morning. I did take it on my live account and it ended up working out. So great day today. So let's break down. So this is normally how I have my setup on TradingView. I usually have both the NAS100 and the S&P side by side on the same screen because these are the only two pairs that I trade, right? I look at both of these pairs from 9:30 in the morning Eastern, 9:30 a.m. Eastern to 11 a.m. Eastern. That is the range in which I'm looking to take trades from. So you can see this is where price is at. So previously in that last video, I was bullish, right? Because previously we were on this leg of price and price was pushing up. Same idea with S&P. S&P was bullish, but at the beginning of this day, right, when I showed up to the trading day, my sentiment shifted, right? I am now bearish on price. Why is that? I'm bearish because you can see this low right here, this swing low, right? The candle to the left and the candle to the right of it are both higher. So this is a swing low that's right here. This is Monday's candle today. As you can see, the new week opened with a massive gap in price, and then price moved down aggressively and broke structure right here, which has now put me on a bearish daily bias. The same idea with the S&P. We look to the right. This candle right here is a swing low, and you can see with this massive bearish candle, this candle blasted through that low right here, which put me at a bearish bias um, for both currency pairs. And I believe this high right here that was cleared by S&P, I believe this was the all-time high. So price came up and cleared the all-time high, essentially made a new all-time high, and then looks like it broke structure. So I'm bearish on price. So because I'm bearish, I'm only looking for sells. So now that we got that out of the way, we'll jump into current day. So ignore these lines down there. These are from like other trades that I took previously, right? So sorry, we'll rewind it. So because I want to do both so you guys can, this is how my trading day actually goes. So I want to do it with a side by side, even though, can I just do it both? Okay, that's strange. All right, so we'll just focus on the S&P then, since clearly it wants to act up. We'll just focus on the S&P. I don't know why TradingView is acting up like this. They used to just allow you to replay both at a time, but now it's probably just the browser that I need to refresh. But whatever. We're focusing on S&P anyways. So here, first and foremost, we want to mark the 830, right? 830 vertical because 830 is the start of the hunt. So whatever these lines are, right? Vertical line, cool. So here we have the 830. So we want to look left to find the most recent obvious swing high, right? So clear as day, it is right here because we can see this is a high that's on an island of its own, and we will mark this, well, right, buy side liquidity. This is where bearish on price, we want to see buy side liquidity get purged and taken before price makes its way back down. So there we go, we marked a high. Now what I'll do, I'll go into the 5 minute, and now I want to see what happens with price. I want to see price clear buy side liquidity and then give us a push down so we can take price lower. So here now just wait for the 9:30 open. So boom, this massive bullish candle to 9:30 open, and now price is pushing higher. So this is perfect, right? We now already have buy side liquidity that has now been purged. And so what I at this point on, what I'm waiting for, I am waiting for a strong bearish candle, right? A candle to the downside, and then I want to see structure get broken so that in a perfect world, right, we can begin taking price down to clear this low, right? And then you have all these lows all the way down there. So that is essentially the goal that I'm looking at. So I'm just on a 5 minute candle, essentially stalking price to see if it's going to give me a bearish candle with momentum. So here we see one bearish candle with some momentum, so I'll drop down into lower time frames to see if I have anything, right? See if price is giving me anything interesting, any sort of break of structure, any fair value gaps, right? Right now, nothing, right? Because the last swing low is right here, and I'll mark it for you guys. Where is it at? Sorry, I used to be a lot faster with this because, I used to use TradingView every day. Now I'm finally back on, so I'm a little slower looking for things, right? It's been a while. Um, so here, I'll I'll mark it whatever color. I can mark it orange or just purple, whatever. But we want to essentially we want structure to be broken. So in this case, structure, this is the last swing before the high that was formed, right? So we need this structure to get taken and a gap to be left, but we don't have that, right? So I'm basically now going to continue stalking price on the 5 minute until we find like another strong bearish candle, right? So clearly price didn't want to go down. It kept pushing higher. So we are just, just still following price. Now, boom, here we see a strong bearish candle. This is essentially a bearish engulfing, right? Because this candle here basically engulfs the entire bullish candle to the left of it, right? Completely destroys it. So now I'm dropping down into the lower time frames to see if I get anything, any structure breaks, any fair value gaps. Right now, not really getting anything. So here's a perfect example. So if you watch my last video, I explained to you guys that a mistake that I used to make with trading this strategy, the ICC 2022 mentorship, is that I used to disregard the colors of the candles. I used to just think, okay, if I receive a break of structure, which clearly you could see this was the last structure point right here, right? Clearly, with this black candle here, structure was broken. However, the final candle that formed the gap, right? Because we can clearly see a fair value gap right here, and this fair value gap fell within the displacement low and displacement high. So this is the displacement range, right? Here we have a push up and then a breakdown. I used to disregard the color of the last candle. This bullish candle right here, I used to disregard that. And so the previous version of me would have jumped in this trade because I said, okay, it's a break of structure lower and there's a fair value gap. Let me take that. But that is not the proper way to trade it, right? It needs to continue with the momentum that I want to go. So because we want to break a structure bearish, then we need the at least the candle where the fair value gap was formed and the following candle to both be bearish. In this case, it is not bearish. So this would invalidate this entry. So I would not be looking to enter this, right? Would not be looking to enter this. In this case right here, right on the 2 minute, this would not pan out, right? Because no, we're not supposed to be using a bullish candle. In the 1 minute, however, this does work, right? So as you can see here, price goes up, and then when price breaks down here, this was the last structure point. Price broke it, and then it left two fair value gaps. It left a fair value gap up here. Well, actually, I wouldn't even like this one because it's formed with a bullish candle, so I wouldn't even entertain that one. I would use this candle, right? Because this fair value gap, right? Because we have a bearish candle that forms the fair value gap itself, and then the following candle is also another bearish candle, and it falls within the displacement range of the displacement low to the displacement high, right? We have the gap here, so this would be a valid entry, and this happened at This is at 10:03, 10:04, so there's still plenty of time, right? So in a perfect world, you would have your stop loss, you would have your entry right here at this fair value gap, right? Because it meets the criteria. We're we're bearish on the daily, so we're looking for sells. Price came up, was digging into buy side liquidity. Then we finally got a break of structure, and then we have fair value gap, and then the following candle is all bearish with structure being broken, and then the fair value gap falls within the range. So this meets your entire checklist. So your stop loss will be above here, and then you have a number of targets. For me, I like going after the low hanging fruit. So you would have low, um, whatever low the swing makes, for example, right? So price came down here, right? Price taps here and then goes under this low. Then at that point, I would move my stop loss to break even, take a small partial, right? You could take partials here, right? Some big fair value gaps here, and then a low here. Like this low at the very bottom right here would essentially be my final target because, you know, I'm fine with going for low hanging fruit. However, the funny part about this trade, this is a trade that I missed. I wasn't fully paying attention. I wasn't fully locked in. So I actually missed this setup here, right? And I'll explain it deeper, right? So the 1 minute time frame, this is a legit entry. So what happens with price? Eventually price taps into it, right? And taps into it again, right? So um there you would be knocked into the trade, and then price eventually goes through, sort of consolidates a little bit, and then boom, with this candle here, this candle essentially pushes through all these structure points here. It also clears another structure point. So then at this point, if you wanted to, you could take a tiny partial here, right, and then save your bigger targets for down here and down here. But the interesting part about this trade, I missed this trade because I wasn't paying attention, and I didn't chase price. Like I didn't want to chase price, right? Because by the time I noticed the entry, price had already blasted through these lows. So I knew that if I had taken a trade, that I would have been break even anyway. So I didn't chase the trade. So funny enough, price does reverse. And if you protect your position, you would have, either been stopped at a break even. And if you didn't take any partials, you wouldn't have had anything, or you would have just at least taken partials here and like a partial here, so you would have walked away with a minor profit. And had I taken this trade, that would have been the end of my day because I, um, if I get a break even or win on a trade, then I'm done for the day. But I missed that setup, so I just stayed behind my computer just in case to see if price would deliver another setup, right? And fortunately, it did within the same time frame from 9:30 to 11. So I continue watching price on the 5 minute time frame. Your price bullish candle, right? And then it gave sort of like a kind of a weak bearish candle. So I just kind of dropped down in the lower time frame to see if there was anything forming. And as you can see, nothing spectacular, right? Nothing interesting. So I just kept it pushing, right? Another bullish candle, but then boom. When I seen this candle, then that's when I decided to drop down into low time frames to see if price could deliver me another entry. Well, my first entry, right? So on the 5 minute, we don't really see anything. On the 4 minute, nothing because this last structure point would be down here for the 4 minute time frame, right? So we're gonna see if we can find anything on lower time frame. 3 minute, we're not really seeing any structure points. 2 minute, right? We have a structure point right here. And now, right, let's zoom in and dive into this deeper. Right, so we have a high here. The price came down and retraced a little. The price came up here and cleared this high, and this was the last structure point before this high was taken. So now after the high got taken, we start seeing price push down a little lower, and then boom. With this candle here, this candle broke this low, and then it delivered another bearish candle. So the displacement range is from this low to this high, right? Do we see a fair value gap within this range? And of course, the answer is yes, right? Because the fair value gap is right here. So now we have our fair value gap within the range. Remember, we are bearish on the daily time frame, so we're only looking for sells. Price came up, cleared some highs, and then broke down and gave us a bearish fair value gap within the displacement range. So this setup delivered all of my confirmations. So at this point, I had a short, I had my high up here. And remember, guys, I'm going for low hanging fruit. So if I'm selling from here, I want to see if there are any targets beneath this entry that I can target, right? Obviously, you have a very obvious low right here, down here. And if I put my position all the way down here, it's about a 1 to 3. So I'm perfectly content with that. I do not have to, like some people might like try to swing trade this. That's not me. I'm an intraday trader. I'm just trying to take my piece of the pie and keep it pushing. So I'm perfectly fine with having that as a full target because 1 to 3 risk to reward, that is more than enough for me. I'm content with that. So this was my final target, and then I see clear as day a fair value gap right here. So we'll just clear out the previous liquidity and we'll get rid of this, right? Because we know that we missed that trade. So clear as day, we see a fair value gap right here. So not only do we have liquidity in the form of this low, we also have a fair value gap that is about 2/3 of the way down to the final target. And obviously we have a fair value gap here, which fits the confirmation for everything that we're looking for in with our strategy. So with that being said, since I didn't take the previous trade, I didn't take a trade for the day, I was able to take this trade. So now if I press next on the candle, right, the next candle immediately at 10:50, right, it's before 11 o'clock, so it's within our time frame. 10:50 candle, price comes up, taps me in, and clearly you can see prices respecting that fair value gap is wicking, which is a good sign. That's what you want to see. You want to see price go up and respect the fair value gap in hopes of price pushing down towards your target. So the way I have it set up, of course, there here is where I take the big bulk of my partials if price makes it to the fair value gap here, and then of course, um, with price, right, you see price came up again, and then it broke down structure here. So with this leg down, I want to see price go up and then break it down. And then once price breaks this low here, that's when I'll move my uh, stop loss to break even for a risk-free trade. And of course, I will take a partial after that first push down. So we can see, I'm just waiting to see what happens with price. So, price is operating and then boom, here we have the massive push below the low here, right? If I go on the 1 minute time frame, right, you see price kind of consolidate a little, and then this push here is what broke the low. So at this point, I was comfortable moving my stop loss to break even. I took a small partial already when price pushed past it, so I took about 20%. And then when price, if price gets to this point, then I'll basically take off at least another 50, 60%, so that if I want to leave a runner to go to this low, the lowest low right here, I'll do so. And as you can see, price just continues and taps into the fair value gap. So at this point, because I'm still trading with a smaller account, since I'm starting off with a smaller account and I'm planning to grow that account, I didn't want to get greedy. So once price got to this point, I just decided, you know what, let me just close it in full. So if I were to do the quick calculation right here, right? Whoa, sorry, low. All right, why is it going so far? Sorry. Oh, so it's about a 1 to 2. Yeah, so from the entry, it's about a 1 to 2. So that's what I decided to do because I was trading on a smaller account. I want to maximize my win rate and be more aggressive with taking partials so that that small account can grow or so that I can trade this pair comfortably. Um, So I had a runner and I was planning to lead the runner down to the last target right here for a 1 to 3. But I decided, you know what, let me not get greedy. Let me just, even though this is still a legitimate target that can be hit, I said, you know what, because the account is small and I want to keep growing it, let me just close out my entire position here. So even though I had already closed 3/4 of my position and I was gonna leave a runner, like the last quarter to the bottom, I just closed it all here. But funny enough, right? If I keep playing it out, you see price eventually makes his way and blasts through the low down here. So had I left the runner, I would have walked away with, slightly more profit. It would have been a slightly bigger win. But that's okay, guys, because at the end of the day, we still did everything correctly. We executed everything correctly, and price delivered as we expected. And this is what I mean. When you guys begin to do things right and follow your rules, when you have clarity in your mind as far as bias, as far as what you're looking for from price, and if price begins to deliver that, all you need to do is just follow your rules and then execute when the time comes. I seen this entry happening and I said, you know what, all my confirmations are met. This looks like a good setup. I took it, and there is there's the proof right there, right? Everything panned out and delivered to a T. And it's easy to go for low hanging fruit, right? Because low hanging fruit would be this low here and this fair value gap and then this low. Like these are very achievable targets for price to go to, and price ended up delivering. So of course, if you had seen this trade and you if you're using the ICD 2022 mentorship model, this is the model in action right here. So this would be an example of a trade that you would take in real time. Um, and of course, price was able to deliver it. So I'm just feeling so happy, so ecstatic because this is the culmination of what I've been working for many months and years, right? Like really trying to make this work. And there were so many challenges I faced because there were so many things that I was doing incorrectly, many mistakes that I was making, and I knew that, you know, this strategy had a high win rate, but when I was executing it, it didn't deliver a high win rate to me, and that's because I wasn't fully executing it the way it was intended to be executed. There were some missing parts, missing ingredients, such as daily buys that I never used to use, and understanding the fair value gaps that the candle that makes the gap and the candle that follows needs to be in alignment with the direction that you want to trade, which in this case, right, bearish fair value gap candle, and then the third candle, which is also bearish, that helped form the fair value gap. Like those are details that I missed or disregarded that affected my win percentage. But now, because these things are being included and factored in, I'm now seeing the result of the true power of this strategy, which has a high win rate, right? The past couple weeks, like I've been looking at the charts like in passing throughout like the beginning of this month, right, in January, and I started seeing a lot of these trades play out, and I was just like, wow, like I'm seeing it all unfold. Like I could catch it in real time, and now I've been doing that, right? And I want to record these videos, of course, so it can serve as a journal for me, so I can look back and say, see like, oh, all these setups are forming, but at the same time I want this to also be for you because this video is for those out there who are aspiring to be traders, right? That might be looking for a strategy that want to know what it looks like to have a winning strategy, what the inner workings of it, just the day by day, showing the examples of the strategy appearing, right? So you can see that that price does in fact do these things, and that price up like that this is the behavior of price, that the markets aren't moving by accident. These aren't bulls and bears that are moving the market. This is an algorithm. This is the way the market is. This is a machine moving price. So it's what I'm showing you here is this is the machine. This is the market. And that's beautiful because when you're seeing it happen in real time, you'll spot it and the light bulb will go off in your mind like, okay, that's my setup right there. There's no debate, there's no confusion, right? That you know your setup when you see it, it'll be there, right? And that's how it's supposed to be when it comes to trading. Like, let me show you guys an example here quickly while we're here, right? So what I mean by like this fair value gap, for example, if we use another fair value gap, let me show you this fair value gap right here that I've highlighted. This gap right here, this would be a gap that I would trade months ago, right? Years ago, because I would just think, oh, fair value gap, yeah, it's just a gap in the marketplace. I'll take that. But where I'm at right now as a trader, I would no longer take this. Why? Because this candle right here, I'm looking to take sells, and I want to see a break in structure, right? So clearly, we have, where is it at? If I can find it again. Sorry. Oh, right here, the icon, right? clearly this bearish candle breaks the structure here, but with the fair value gap, the fair value gap was formed with a bullish candle. It's not a bearish candle, so I wouldn't take that, right? I would not take this trade on this time frame, even though it looks like a legitimate trade. And if you were to take it for a sell, of course you would have gotten some profit. Obviously, in the 1 minute time frame, it would be a trade. On this 2 minute time frame, it wouldn't meet the criteria, but the previous version of me would take it because I would just see a gap. When I now know how to further filter that, and it was done here, right? And look, it led to price delivering as it should. So if you've been struggling on your trading journey and you've been looking for a strategy and pairs to trade, I trade NAS100 and the S&P, and this was a trade that I took today that I was able to profit from. That I took my final target here into this fair value gap because I have a small account, I want to grow it, but final target I initially had it down here, and of course as you can see, price eventually goes down and delivers to the final target. So that is the trade recap for Monday, January 27th on the S&P, and that's showing price delivering to the T as we anticipated. So if you enjoyed the video, do leave a like and subscribe as I will be posting more content in the future, right? I'm just previously I was posting daily, but I just feel like it's most helpful to just continue posting examples of trades that I've taken or trades where like this setup form so that you can see it over and over and over, and then you can begin training yourself to spot this. I think that's what's most helpful. But hopefully you found great insight from this video here showing you a trade that I took earlier today, so that you guys can get a better understanding of that and be able to be your own at some point in the future, right? Be an independent trader and do this for yourself, because this is a high income skill set that can really change you know your financial situation and your family's financial situation in due time, right? And this is a skill set that no one, once you have it up here, no one could ever take it away from you, and that's something that you can benefit from this for the rest of your life. So if you have the willpower and you want to become a trader, right, stick with me along this journey, right? And we'll go through and we'll continue growing as traders, and it's inevitable. I, every fiber of my being, I believe it will happen, that we will all win. So thank you so much for watching, and I'll be posting more content very soon. So once again, guys, Joel, and I'm out. See you guys for the next video.